Hey guys, I'm Emma. In today's video, we are going to look at how to unlock precision entries using moving averages and stochastic indicators. Now let's have a look at the chart and see how this looks. In this example, we are looking at the euro-dollar on a 1-hour chart. And you can see here that using moving averages makes it easier to determine the trend. So the direction that we want to be trading in, clearly a downtrend here. And notice one thing on the stochastic indicator. When we have a pullback to the moving averages, we also have a pullback to the oversold or overbought on the stochastic indicator. So take this example right here as one, and we can see that almost every day we have a pullback for the moving averages before a bigger move in the trend direction, and we can see now that we have a change of direction here, and the market is now moving up. So we are only looking for long trades. For a long trade, we want to see the stochastic indicator move down to the oversold area, and then look for a change of direction against there. This will be a pullback to the moving averages, which we can see here by these couple of candles. And looking at the stochastic now, we can see that it has gone to the oversold area. So now we are looking for the turnaround candle and a long trade. Here we can see the stochastic has just crossed up over the lower level or the lower line, and we do have the green candles now showing the move up swing candle. And let's look at the stop loss and the result. Stop loss for this case would be about 13 pips, so just below the swing low, and I normally go for a 1.5 or 2R. In this particular case, we would have got a 3R trade, so you could have done either. The same works for the short trades as well. Let's have a look at that on the chart. We have an example here where we had almost 2 weeks worth of downward movement, and looking at the setups, here is a perfect example. We can see here that the swing is now short, it's just changed direction. It is now short, and a good time to get in is just after a change of direction as well, because then you may have several days of trading in the same direction. You could actually take multiple trades on this one move, and let's have a look at how that works. We've got a pullback to the overbought area on the stochastic, and the candles have pulled back to the moving averages. Now we just want to look at the swing candle, and it looks like we have a swing here. So this is our entry point, and also just to point out, not every trade is going to be a winner. At the moment, this looks like a good setup, but it could still go higher and take out our stop. Let's have a look and see what the result is on this one. It looks like it was a good result after all, and we did have a long swing. So the stop loss would be around 20 pips, and if we're going for 1.5, that would be a 30 pip take profit, and if we were going for 2R, that would be a 40 pip, but this particular run went for about 71 pips. So we would have actually got a 3R trade out of that one. We have another setup the following day, a pullback to the moving averages, and we look again at stochastic. It just touches the upper line, but the same setup here on the candles. We look at the swing candle. We have a stop loss of about 12 pips, and the move went for about 44 pips. That's it for today. Leave a comment and let me know if you think this is a good strategy, and maybe you have used this before and gotten some good or some bad results. Let me know in the comments below.